righty? Now, just in case you're wondering, should be out hopefully tomorrow. Okay, so what do we got? Charlie, what's good? We got a newbie in the house. Now, the only reason I know we have a newbie in the house because he's asking about SCHD. Okay, so Captain Capscrew, I'm going to pick on you first. Don't take it personally because you're probably unaware. Also, no Calendly appointments available. I'm going to have to check that one out because I didn't have any appointments today. Not a single call scheduled for today. So something's got to be wrong there. Tell me what you think of my short skirt. Suzu. Okay, Suzu, thank you for that. I'll have to keep my eye open for that one. What happened? Everything is dropping like UNH. We'll take a look at that in a minute. All right. Dev, what's going on? David, Heather, how are you? How are you? Down here. Dev, what's going on? All right. So, first on the list today will be SCHD. Now, I don't like SCHD, and there's a reason why. Okay? It's one of those few companies that they just rip your mouth open and ram it down your throat and say, enjoy. Okay, what the hell? Well, let's check it out. Hold on, Captain. We're going to be on you in a little bit. Here we go. SCHD. Now, first, Captain, finance. I tell everybody, you need to find information that's not readily available. So you really need to take a dive into anything before you decide to buy. So let's check out SCHD. I will take a look at the dividends, right? Dividends only. That's what I want to look at. And I'm going to tell you why in 1 second. As soon as I get all of the dividends for SCHD, I want to see every single one. Now, the reason I want to take a look at all the dividends, because I have a pet peeve of mine. Okay? I only like stocks that are consistently profitable for at least 2 decades. Now, 2 decades is 10, 20 years. Okay? 20 years of consistent profits. So I directly to the dividends. Now, if you wanted to, and you like reading, you can go and read 20 years of annual reports and 20 years of quarterly reports just to see how profitable the company is. Or you can cheat. I'm a cheater. I really am. I don't want to read quarterly reports. I don't want to read annual reports. I want to know, is the company profitable? Yes or no? And I want someone else to tell me. Well, guess what? Somebody does keep track of the most profitable companies consistently. I'm talking year after year after year after year. More money, more money, more money, more money. Because that's what we're doing this for in the first place. We're entrusting our money to a bunch of executives, and we're counting on them to do their job well, and to be consistently profitable. So looking for the dividend, if you didn't know, the dividend is a very small portion of the corporation's profits that they give back to the investors, and that's us. We buy and sell the stocks. We are the investors. So if we buy the stocks, we are entitled to a portion of the profits. Now, there's a minor problem with this. Half of the companies don't share their profits. They take all the profits, put it back into the company for growth. They are called growth stocks. Not what I'm looking for. I'm 62. I'm retired. I want the other half of the list. Well, they pay dividends and they share their profits. So if the profit is higher and higher every year, so does the dividend. If the profits go higher, the dividends go higher. If the profit increase, the dividends decrease. So you can read all quarterly reports and reports you like, going right to the dividend. If the dividend is increasing, that means they're making more money. If the dividend increases for 20 consecutive years, those are the companies that I want to look at. Sorry, it's a cheat code. I want to go, I don't want to read it. Okay? I've read plenty in my days, and if I'm going to read something, I want to make it worth my while. So quick, easy write-ins. Are they increasing? Great. That means the company's making more money year after year after year. 2 decades. That's what I'm looking for. So let's check out SCHD and see how wonderful they are. Because apparently Captain Capscrew thinks they're good. So let's find out. Only because anyone who's been coming here for more than a week or so knows there's a few stocks you just don't ask me about, and SCHD is one. Here's the reason. Let's take a look at how wonderfully profitable they are. Oh, wait. The very first dividend was in 2011. Well, 2011 to today is not 20 years. At least where I went to school. What is it? 15 years? Now, 15 years might work for you. Okay, we'll cut you a little slack. Let's check it out. First dividend, 4 cents. Second one, 4.6, 6.8, 6.9, 8.6, 6.6. That sucker just dropped 20%. You explain to me how I'm supposed to be comfortable with a dividend that decreases 20%. I used to see saber-toothed tigers when I was a kid. Do you ever get to see a dinosaur? Oh my goodness, yeah, I did. When I was little, we used to ride around on brontosauruses. Cool little animals. Kind of look like Dino from the Flintstones, little brontosaurus. You can't see the screen? There it is. All right. So, hold on. It actually gets worse. All right. So, it drops 20% right there. Not happy about that. Okay. From 66, it goes 5, 7.7, 8.3, 8.2. All right. It went down, but not by a huge amount. But it still went down. 8.9, 8.4, it went down again. 9.1, 9, it went down again. 10, 9.9, 9, it went down again. That's 4 times it went down. 10, 8, so look, it dropped another 20% right here. This is the second time this thing has dropped 20%. Second time it dropped 20%. 6th time it's dropped. Okay, so I'm looking for stocks that are profitable year after year after year after year after year after year. I'm not looking for this 2 steps forward, 1 step back, 3 steps forward, 1. No, I'm not looking for that. I'm looking for companies that are consistently profitable, point blank. That's it. All right, so let's keep on going. Okay. Up, up, down, up, down, up, up, down, up, down, up, down, up, up, down, down. Same, 18, 20, whoa, down another 20%. That's the third time this thing has dropped 20% in the last 15 years. Up, down, up, up, down. Wait a second. Right here, it dropped 15%. So it dropped 20% twice, it dropped 15% once, and it dropped 6 other times. I can keep going because we're only at 2022. We got a couple more to go. Okay? Higher, lower, higher, lower, higher, lower, higher, lower, higher, lower, higher, lower, higher, higher. Okay, doesn't thrill me at all. 16 years, number one, it's already off by a few years. I like 2 decades, not 16 years. It decreased twice. 20%. It decreased 15%. That's 3 times. And 6 times it just decreased. That's not consistent profitability. And I don't know why the hell you would put your money into something that decreases about as often as it goes up. Up, down, up, down, up. Yeah, no thank you. I don't like SCHD. It's not consistently profitable. No thank you. Next. Who wants to be picked on next? Invest. That means, Elmi. Oh, wow, we got some people down here. What do we got? Dev, what's happening, Dev? Any options in Bitcoin? Dude, I don't do cryptocurrency here. Okay? If I'm going to do cryptocurrency, it's going to be on a different channel, not this one. Sorry. Dividend stocks and options. No. Just the iconic drop. Okay. My bud is okay. Thank you. Okay. That's crap. Invest seriously. S&P regular year after year too good. Oh hell no, it ain't. Okay. Diamond. Stupid. Yeah, it is stupid if you think about it. Let's take a look at the SPY. It's just Standard & Poor's ETF. SPY. The S&P 500 ETF. Let's. You think it keeps going up? Here it is. SPY. Let's take a look at the numbers. Back. All right, here we go. Let's go back 20 years quickly. I don't want to spend too much time on this thing. You ready? Diamond. Are you ready? Let's take SPY, which is the Standard & Poor's mirrors S&P. So let's take a look and see how consistently profitable it isn't. All right? 20 years ago, 5-1. Higher, higher, higher. Lower. Drop 20% right there. What makes you think that's good? Higher, higher. Lower, lower, lower. That's 3 times in a row the dividend went down. 3 in a row it went down. 59, 48. Okay, so higher, lower, higher, higher, higher. 65. Right there. Lower, higher, lower, higher, lower, higher, 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 lower. Do you see what's going on? Higher, higher, lower, higher, lower. It's not consistently profitable. So don't give me the crap that S&P is wonderful. It's not. Okay? Let's take a look at the summary right here. Take a look at the summary and take the number. Take a look at the yield on the SPY. Standard & Poor's right there. S&P 500. Ready? Take a look at this. 1.05. The yield. You understand what the yield is? You take all the dividends, throw it together, you divide it by the purchase of the stock. That gives you the yield or the rate of return. Well, S&P 1.05 a year, not 1.5 a week, a month, quarter. No, 1.05 for the year. Don't give me this S&P crap is wonderful. It's not. All right, go ahead. Glad you like it, bro. We are holding. There you go. That's the game. Yes, it is. Okay, Ethereum is plummeting red, but for the reason it's not the best. Do Ethereum, not here. We're talking about dividend stocks. Can you tell me your television name? It seems like Black Billboard. What the hell? I'm not even going to bother with you, dude. All right, what do we have over here? So, okay. So heats, what do you think? SCHD ain't glamorous, is it? It's not consistently profitable. Why would you put your money into something that is not profitable? It just doesn't make sense. But you know what? You do what's right for you, okay? I like companies that are consistently profitable year after year after year. Go over PLTY. Hell no. PLTY is just dead. PLTY. anything that's heavily marketed by a company, buy. You really think good? You think they make a big commission on it? Let's keep going. Yield max, PA. Oh, all right. Who came up with PLTI? Joe, explain this to me, Joe, if you don't mind. Are you ready, Joe? The yield. Okay, explain that to me. 120%. How the hell, if I make 100 million, how the hell am I paying out 128 million? You cannot give out more money than you make. It's absolutely impossible. They call that a Ponzi scheme. You make more money, you pay out more money, but you can't give more money than you make. You cannot give out 128% of your dividend. You can't do it. Never mind. Let's go to historical data and just check and see how wonderful this PTR is. Okay. Look at the dividend only. I will get all the dividends. Oh yeah, it's 2 years old. Why the hell would I invest in a company that's 2 years old? Think about it. It's 2 years old. Okay? You got these companies get huge amounts of money from fund managers and investors. And what do they do with that money? They give it out in dividends to attract buyers, to suck you into that price, and you get stuck with it. This thing's 2 years old. The first dividend was in November 2024. Well, let's look at the numbers. The first one, $2.20. That's the first dividend, $2.20. The second one, $3.30. It went higher. $3.58. It went higher. And it dropped to $2.90. That's over 22%. It dropped. Then it goes to $5.90. $5.30. It dropped again. $4.60. It dropped again. Hold on. It gets worse. It goes from $4.60 to $7. Then it cuts it by 50% down to $3.20. Then it goes to $2.50, $7.40, $2.40. Look at this, $3.20. It went from $3.20 to $74. Explain to me in a manner in which I will understand. This thing went from $3.20 to $74. No, I'll say it again. $3.20 to $74, and you think that's good? Seriously? Okay, 74, then it goes to 73, 120, 121, 83, 73. Hold on, it's even worse now. Check it out. 9, 130, 56, 43, 99, 51, 45, 41, 37, 39. Didn't we start with, what did we start off with? We went at 220, went as high as 7. We went as high as 7. Now, we're at 36. To 36. How the hell can you convince me that that's good? You go from a $7 dividend down to 36 cents. And it's only 2 years old. And you think it's wonderful? Yeah. Some people, I wish you guys could have like some kind of asterisk next to your name giving me your intelligence level, and that sounded so bad. Because you guys are buying stuff that just doesn't make JEPI. Holy shit. Dog face. Didn't we do this the other day? We did, and you still think that's a good one. JEPI. The numbers. This is only 2 years. Wait, it's more than 2 years old. Yes, it is. It's years old. 6 years. Look at the numbers. Are you ready? 49, 29, almost a 50%. Almost. Let's call it like 35. 45% drop. Then it goes 45, 43, it's lower, 50, that's lower. Look, now we're at 26. That's even lower. 32, 34, 37, 31. That's lower. 25, that's lower. Okay, 36, 38, 45, 38, that's lower. 46, 58, 46, that's lower. 62, 49, that's lower. 48, that's lower. 44, that's lower. 41, that's lower. 30, 29, that's lower. Really? What the hell are you guys thinking? Not all of you, just a select few. All right, let's keep on going. Kevo, you like the beard instead, huh? All right, let's get some halfway decent stuff. Some of the stuff you guys are coming up with is just ridiculous. Charlotte, good evening. Tortuga, how are you? Alpha Bravo, how are you doing? SoFi, oh my God, not SoFi. Don't you guys go in and take a look at the numbers? I like a girl in a white short skirt and a long jacket. Oh, way to go, Dr. Dev. Okay, so Captain, Capscrew, I'm just going to ignore you, dude. I can't believe you actually like SCHD. You remind me of one of those people who buys something just for the sake of buying it without even reading what's in it. Because apparently you didn't read what's in it because it's not profitable. So what? Low liquidity. Yeah, no thank you. You hate the Dow? No, Capscrew, I like the Dow. Dow is actually good. Let's take a look at it. D-O-W. I want to see is the 1 year chart. Get a 1 year chart. I'm looking for 5 specific things. Okay? I'm looking for, number 1, the high of the year. The low of the year. Where was it a year ago? Where is it now? And what's the motion of the ocean? Down, sideways, up. Well, that's pretty good, right? Let's take a closer look before we decide how wonderful this is. Last 30 days. Okay, we're here at 23. We shoot up to 33. 23 to 33 is 10 bucks. What is that? 23, 33, 10 bucks? That's about 47, 48% increase. Of course, there's going to be profit taking, and it looks like it started today. But from what I understand, the rumors that I've heard, that a lot of things went down today. Okay, but do you like Dow? But it's time. Look at from 20 to 33. Now it's time to go down. Now it's time to let it go. Take your profits, move on. It's actually that easy. Take your profits, move on. And Vinny, no, I don't like SoFi, Vinny. And if you really want me to go in and take a look at how crappy those dividends are, I'd be more than happy to. Is this a record? No, Kellum, it's not a record. I missed some questions. Dr. Dev, how are you doing? Okay, CDR wants to take a look at IAU. What the heck is that? Oh, I'm wondering about the TV blackboard he's writing on. It's called the Vibe. Thank you, Dev. Companies that is continuously profitable. Oh my goodness, really? You want to see a company that's consistently profitable? Let's check this. How many do you want to? I'm just curious. Consistently profitable. Let's go look at all the dividends. It's just 2 decades. No, that ain't right. There we go. Looking at 2006. Because 2006 to today is 20 years. Okay? Okay, Paul, here we go. Watch this. 2006. 9, 13, 16, 20, 23, 28, 31, 36, 42, 46, 51, 56, 62, 68, 75, 83, 91. That's one every single year. Higher, 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 higher. Okay, great. You want to see another one? Here we have another one. All the way back. Here we go. All right. 33, 30, 41, 46, 40, 54, 57, 61, 66, 70, 75, 80, 84, 90, 95, 101, 106, 113, 119, 124, 130. I can do this all day long. There's about 300 companies, 300 that are consistently profitable year after year after year after year. None of this up-down bullshit. No. Consistently profitable year after year. Those are the companies that like. Let's keep on going. Gun makers, that's a funny one. No. What companies that is consistently profitable? Dude, are you ready? Okay, I'm going to give you 5 lists. Okay, you got a pencil, pen, crayon, marker, mascara, lipstick? I don't care, write it down. Dividend Kings, 5 decades. That's 50 years. 5 decades. Consistent profitability. Dividend Kings. Dividend Aristocrats, 25 years. Increased profit. That's a quarter of a century. Dividend Champions, same thing, 25 years. The rules are a little bit different between the aristocrats and the champions, but still, 25 years of increased profits. Dividend Contenders, 10 to 24 years, consistent profits. Those 4 lists will give you about 300 companies that are consistently profitable. Okay. El Gato, ADM, Archer Daniel Midland. That's another Dividend King. 5 decades of consistent profits. Rubber Boot, what's happening? What do you think about buying Microsoft Leaps right now? All right, so understand one thing, Rubber Boot. I don't buy options. Most options expire worthless. So I sell options. I prefer to be on the side, if that's okay. Brian, you saying it's blurred? I'm sorry, dude. You should really reverse the image. Very hard to see from a viewer standpoint. My name is Christopher. Good afternoon, Christopher, and how are you today? So, Frosty, you tell me how to mirror the screen on YouTube using the selfie camera on an iPhone. I'll be more than glad to switch it over. Really, I would. Okay? What else do we have over here? La 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 la. Okay, so CDR wants you to take a look at IAU. I have no idea who they are. IAU. IAU. iShares Gold ETF. You'll know right off the top. Okay. There's a top right there. She bottomed out. Yeah, no thanks. It doesn't have dividends. Sorry. Computer Stream not online. We already figured that one out. It seems to be working now. Suzu. Can I be your gamer girl? Hey, Suzu. Tell me what I think of your short skirt. Oh, okay. All right. Live visibility restricted. Your live is not eligible for recommendations and is restricted in search results. Okay. They send this to me every single night. All righty. Johnny, what's happening? Len, what happened? Everything dropping like UNH. I don't know there, brother. I really couldn't tell you. See, I don't sit in front of the computer like you guys think I do. I don't. I get on in the morning. Takes me 15, 20 minutes to do my own accounts. I take a look at 5 things. What did I buy it for? What did I sell it for? Where's it at? Where's it going? What should I do? That's it. Think about it. Let's say Caterpillar. Great, I bought Caterpillar. What did I buy it for? What did I sell against it? Where's it at now? Where's it going? And what should I do next? So I trade from Monday to Friday. That's it. Weekly trader. So I'm looking for weekly profits, weekly cash flow. That's what I'm looking for. What happened? Okay. Len, Dr. Susie, I like a girl. Okay, you guys do your own flirting somewhere else, okay? Slavic chick, savvy chick, what's happening? Kellum, why are the markets so volatile? Because weird stuff keeps happening in the news and people just do weird stuff. So kill them nicely. No, this is not a record. John Bohe, PNC. PNC. Oh, no. I don't buy anything at the high. I'm terribly sorry, dude. What is the point of buying something at the all-time high? What are you waiting for it to go higher? Yeah, I don't play that game. I look for opportunities. Stocks do two things and only two things. They go down, they go up. 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 That's all they do. If you're waiting for a stock to come home and make you dinner, okay, make the bed, take the dog out, take out the trash, wash the dishes, that ain't going to happen. Stocks do two things and only two things. They go up, they go down. It's your job to jump in at the right time. Think about it. You go to an amusement park. What do you see? Merry-go-round. Round and round and round she goes. That's all it does. It's go round and round and round. The horses go up and down, up and down, up and down. You jump on, you take a ride, and then eventually you jump off. It ain't that difficult. Stock market's the same way. You see a stock going up, you jump in. As it's going up, you take your profits, you jump off. Wait for it to come around again. And they always do. That's all they do. They go up and they go down. That's it. If you're expecting a stock to do more than go up or down, you are sadly mistaken. Okay, so no to PNC. Vinny, no. Vinny, please do yourself a favor. Take a look at the profits on SoFi. Are they increasing or are they decreasing? Mark, Microsoft is disappointing. Why? Why would you say Microsoft is disappointing? They've been over 25 years. Hold tight for a second. We're going to go to statistics. Now, statistics. Okay, so look, you think they're going down? Well, what's fine? You can pay attention to the prices in the stock market. The stock market is it's got nothing to do with the actual value of the company. Check this out. Okay, market cap. 3.8, 3, 5, and 3. Ooh, yuck! It is dropping the market cap. Enterprise value went from 3.6, 3.8, 3.5. Okay, that's decreasing. Okay, that's decreasing. The PEG ratio, that's decreasing. Price sales book, that's decreasing. Enterprise value, that's decreasing. Enterprise value EBITDA, that's decreasing. Ugh, look good at all. Okay, so return on equity, 39%. Return on assets, 14%. Profit margin, 39%. That's for this year. This is the current information. Revenue, $300 billion. Quarterly revenue, up 16%. That's good. Gross profit margin, $200 billion. Net income, 119. Earnings per share, 16. Quarterly earnings growth, 59%. Balance sheet. Book value, 52.62. Those are the numbers that tells you how quality the company is or isn't. The numbers here, the factual numbers. Not the stock price. Stock price is just our opinion of what we think. That's all. The solid numbers, that is what the company's actually worth. That's how you figure out what it's worth. Okay, what do we have over here? Car audio lover. Some of the great dividend stocks you would recommend. We already did that one. DMNC trades. Benjamin Netanyahu. Okay, no. Drew, Patreon member, thought about providing a list of stocks that you screened for the upcoming week. Absolutely. We're getting on that. Like I said, Jacob just started the other day. We got a brand new computer today. It has 2 terabytes of storage. The computer here, I think I bought this in like 8 years ago. It's like on its last legs, but it still works. Okay, I'm one of those old dudes who like, hey, it still works. Leave it alone. And Jacob's like, no, Dada, it is so old you can't do what you want to do. Anyway, so we bought a new computer today. We're working on it tonight. So hypothetically speaking, the next time you see me, well, hopefully it will be better. I don't know. I just stand in front of the camera and do my thing. All right. Ninny P. BUT. Is BUT an actual stock? I don't know. BUT. Bruner Investments. Are you kidding me? Really? That's actually a ticker symbol? BUT? Okay, can't find the symbol though. Nothing there. Sorry. VTI. What the heck is VTI? Vanguard Total. Okay, I don't do monthly options. The numbers just don't work in my favor, so I don't do them. Imagine that. It doesn't work in my favor, so I just don't do them. I got a reflection on my screen. How the hell do I have a reflection? Nope, that ain't it. Well, that ain't it. All right, well, I got a reflection on my screen. Okay, VTI, no. Alex is in the house. Jim Clark, how are you doing today? Deep in the money with Mara. Okay, I think I'm screwed. No. Alex, never panic. Remember rule 1? Never buy something you don't want to hold on to. Okay? Rule number 2, never sell at a loss. Let's take a look at Mara. I actually have Mara too. And yeah, Mara, ouch. I saw it this morning, but look at the way it looks. All right. Hold on, Alex. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down. Okay. We're currently at 673. All right. So my assumption is that you probably bought it the same place that I bought it. Okay. All right. You see this right down here, Alex? 1681. That's what I bought Mara at. 1681 is right up here. That's where I got Mara. But this week, which one did I sell? The 10s. Okay, so we're here now at 673. I jumped in at 16. I sold the 10s this week. See that? The 10s. And the 10s, well, that's tomorrow. What's next week? Okay. So Alex, okay, I'm in at 16. Right? It's at 6 right now. I sold the 10s. The 10s are paying only 4 cents. That's it. 4 cents a share. But guess what? Remember rule 1? Never buy something you don't want to hold on to. Rule 2, never sell at a loss. Now, could I make more money taking the loss and jumping into something else? Yeah, I probably could. But then I got to live with that loss. And I refuse to take a loss. Sorry. So, yes, Alex, I'm going to take that crappy little 4 cents that they're offering. But next week, I might drop it down to the 8s. And next week, the 8s are going for 30 cents. I'm okay with 30 cents on the 8s. Always keep an eye on what did I buy it for. I bought it at 16. Where is it at now? It's at 673. Okay, where does it look like it's going? It looks like it's still going down. So what should I do now? I'm going to sell the 8s for next week. And the 8s are going for 30 cents a share. Now, 30 cents a share is close to 2%. Because remember, I bought it at 16. I could even go to the 8.5 and pick up 20. That's probably safer. But I always stay at least 3 to 4 strikes out when the stock drops. It gives me wiggle room to keep an eye on it. So I'm in the same spot you are, dude. I am at 16. Which ones are those? I have no idea what you're talking about. Can you explain what to do during a bear market when this paid more than the market is worth? Okay, so there is going to be a bear market, Alex. Don't kid yourself that it's not. What goes up is going to come down. And it went up a bunch, so yeah, it's going to come down a bunch. So keep your wits about you. Make sure whatever you buy, it's worth holding on to. Now, Mara, I would like to get rid of it as soon as it comes back up again, only because we're coming into a very awkward situation, which means I only want to deal with companies that have at least 5 decades of historical performance. I would prefer to stay just in the 100-year-old companies. There's plenty of those. Because think about it. If a company's over 100 years old, that means they've seen a lot. You've seen World War I, World War II, the Great Depression, Vietnam, Korea, what's happening in the Gulf, what's happening in what do you call it, Cuba, what's happening in El Salvador, what's happening, what do you call that, Desert Storm, all that crap. And then what do we see? The market crashes. We saw the crash of 29. We saw the crash of 87. We saw the crash of 2000. We saw the crash of 2008. We saw the crash of 2021, the crash of 2024. We got another one coming. They come every decade. So it goes up, it goes down. Keep your wits. Never buy something you don't want to hold long term, regardless what happens. Because a company that makes a product that we use consistently is always going to be in business, always going to be employing people. Let's see what else we got. I'm not going to do DIA. No, I'm just not going to do it. What else do we have over here? J Mass wants to take a look at Caterpillar. So, Alex, as I was saying, I'm in the same boat you are, brother. All right. KMX, CarMax. What the heck is KMX? CarMax. No, I don't do monthlies. February, March, April, July, September, January. No, I don't do monthlies. The numbers just aren't there. Just not going to work. What else do we have? Over time, historically, is up and to the right. Yeah, 110 Beast, you're right. On average, over the last 100 years, the stock market has increased 10% per year over the last 100 years. But if you take a look at it, what do we have? 14 or 16 pullbacks over the last 100 years? It goes up, it pulls back. It goes up, it pulls back. It goes up, it pulls back. That's what it does. But overall, it's averaging 8 to 10% per year, even with the pullbacks. So yeah, when it drops, don't sell. Just keep doing the covered calls. Would you consider a monthly on the week of expiration? No, somebody asks me that every week. No, because if you're wrong, if you miss, then you're stuck in that thing for another 30 days. Armando wants to take a look at Lowe's. I love Lowe's. I do. I think I buy it almost every quarter. Lowe's, L-O-W. Now, Lowe's is a dividend king. That means 5 decades of consistent profits. For those of you guys who are saying, well, what companies are consistently profitable? Lowe's is 5 decades, higher and higher and higher profits. Oh, what do we got? We got the high, the low. Where was it? Where is it? Down, up, down, up. We're at 274, a little too close to the high for me. I don't like buying at the high. Sorry. You like that 110 Beast? Way to go. Armando, good to know. Thank you. But Armando, if you really like Lowe's, right? Look, 30-day bottom, she shoot up, back down, back up. Now it's coming back down again. Give it a couple of weeks before you jump back in. No, it's not advice. It's just take a look at it again in a couple of weeks to see if it makes more sense. Because right now, the high is here. She pulled back. Well, there's your profit taking. Now it goes up. Now it gets some more profit taken. It's going to keep going down. All righty, Mondo. Thank you. Caterpillar. Let's take a look at Caterpillar. Caterpillar, another company has 5 decades of profits. Caterpillar. I don't buy at the high. Sorry, I just don't buy at the high. It just doesn't make sense to me. Do you look at the last 365 days or year to date? Okay, 110 Beast. Do you see this right here? This is today. This is 365 days ago. Okay, a year ago, it went down, it went up. Yeah, I look at a year ago. That's about it. I'm just looking for momentum. Where is the money coming from? Where is the money going? All right, Amando. Sometimes it's easier to DM me here. See the top left corner where it says the 10-minute trader? Just go on there, click on there, and send me a direct message with your phone number. I will call you back personally. Does not mean I'm going to pass you off to someone else. Me personally. I will call you personally. Okay. El Gato wants to take a look at Archer, Daniel, Midland. Another Dividend King. 5 decades of profits. Nice pick there, sir. But no, monthly. No, I don't do monthly. Just plain and simple. I don't do it. All right, Mondo. Thank you. You're welcome, dude. Rapster. What's happening, Rapster? Yo. I'm going to think of a good Rolling in my 5.0 with my rag top down so my hair can blow. The girl is on standby. I just waiting to say hi. Did you stop? No, I just drove by. Okay, anyway, that's my rapping. All right, ADM, we looked at IREN. No, IREN just doesn't fit. IREN. Okay, and besides, take a look at this. We're less than $1. See that right here? Less than $1 a year ago. Not even a year ago. What, 8-9 months ago? Shoots up to 75, drops back down to 39. If it was at $1 6 months ago, how the hell can it have 20? That's 2 decades, 20 years of increased profits. $1. How do you get 20 years of profits out of a stock that's $1? Not a game that I want to play. Doing work, AGNC. I used to trade it. I don't anymore. Here's the reason why I don't trade it anymore. It's got nothing at all to do with the stock. Nothing to do with the stock itself. Nothing. Look at this. 0, 0, 0. If you're wrong, if the stock goes down, you're not going to get anything. 1, 2, 3 strikes out of the money. 0, 0, 0. It doesn't give you anything. Think about it. The only thing you can get from AGNC would be stock appreciation and dividends. That's it. You won't get any income from the premiums because 2 or 3 strikes out, it goes down to 0. It just doesn't make any sense. What's some companies that you believe is profitable year over year? Car Audio Lover, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren's list. That's over 300 companies. Just go to Google and do a search. Dividend Kings list 2026. And lo and behold, they send it right to you. They actually give you the list for free. Well, they take your email address to send it to you. User 93588 GLD. Okay, the high's here and it dropped. I don't know what you want to tell me. Gold does not pay a dividend, so no. Buckeye Fever, Amazon, AMZN. You do know that Amazon is not a profitable company, right? No dividends, no profits. It's dropping also. But if you really like it, if you really like Amazon, okay, gaps have a tendency to fill, which means as soon as it finds its bottom, it will turn around and go back up again. As soon as it finds the bottom, you just got to wait and patient. What's happening? It's a pullback. What do you mean what's happening? That's what stocks do. They go up and they pull back. That's it. What are some dividend stocks you recommend? I already did that one. New Jersey 78, Bristol Myers Squibb. Hell no. Come on, dude. I don't buy anything at the high. No, it just doesn't make sense. Am I screwed with Poet and Arquette? Hell yeah, you are, man. Let me check it out. Hold on. I have no idea what either one of those are. Michael, thank you, Michael. Put it on a pizza. Okay. Poet, Poet. Poet Technologies. Well, I'm not 100% sure what you want me to tell you. But here's the thing. Number one, I've never heard of the company. Number two, let's take a look and see, does this thing even fit? Poet. Historical data. Dividend look like. So put it on no dividends. Okay. If the stock has no dividends, why am I? No idea why you're looking at it. Okay. Looking for simple, safe, predictable, consistent 1% per week, and I can only get that with companies that have weekly options and dividends. And the reason why I want the dividend is right here. Let's open this up and I'll show you. This right here is an EX dividend calendar. It tells me the stocks that have dividends, that are consistently profitable, and when they're paying their dividend. So if I want to buy Delta Airline, the dividend is the 26th of the month. So I'm going to want to buy that stock on the 9th. It's 2 weeks. It's 1 week, 2 weeks, 3 weeks before Delta Airlines has its dividend. That gives the stock plenty of time to move up, because stocks, dividend stocks, have a tendency to increase in value just before the dividend. That's why I use an EX dividend calendar. It tells me the stocks that I like. If I like, the Dividend Kings, I will create a list. Okay? I will create my own personal list that has what I'm looking for. And then I will look at just the stocks that I want to look at. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Old Warren's list. That's what I want to look at. I don't care about the other 10,400 stocks, because there's about 10,800 different companies out there. I'm only looking at 300 of them, because only 300 actually have increased their profits for more than 2 decades. Those are the only ones I like. Am I screwed with RCAT? Let's take a look at RCAT. I have no idea who RCAT even is. RCAT. Okay. Okay, the high, the low, where was it? Where is it? Down, up, down, up, down. It went from $6 to $18. Now I'm going to say that very slowly, put it on a pizza. Are you ready? It went from $6 to $18. That's a 200% increase. I have no idea where you jumped in, but the low right here, $6. The high right here, $18. That's a 200% increase. If you don't take your profits, don't get mad that the market takes it away from you. Remember, there's 2 simple rules when it comes to profit. Number 1, it's not a profit until you take it. That's pretty simple, isn't it? It's not a profit until you take it. And number 2, nobody ever went broke taking profits. You just had to decide when and where do you want to take them. Nothing goes up forever. When it was at 6 and it kept climbing, it finally reached 200% increase. What do you think was going to happen at 200% increase? Profit taking. And then it just drops until it's done. And who knows when it's done? It's done when it's done. That's the weirdest thing. It goes up until it's done going up. And then it goes down until it's done going down. I don't know why people get so upset about it. Just look at the numbers. Okay, it went up, it went down, it went up, it went down, it went up, it went down. Okay, know when to take profits and know when to step off of the merry-go-round. Let the game continue until you're ready to jump back in. It's actually that simple. Now here, she jumped up. I give it 2 or 3 weeks before she's done. Turns around, goes back up again. If you really like those. But remember, it's not a profit until you take it. I got 5 simple rules, and they're pretty simple. Rule number 1 is never buy something you don't want to hold on to long term. So my assumption, you bought it, so you want to hold on to it for long term. So hold on to it long term. That's it. It went down. Big deal. They always go down. And guess what? They always go up. They do 2 things and only 2 things. They go up and they go down. Flip a damn coin. It's heads or tails. I think one, and maybe, I don't know, they probably did a governmental study somewhere where you flip a coin and it actually lands on the edge. 99.99% of the time, it's heads or tails. I've never, me personally, never, ever, ever seen a coin land on the edge. But I heard it happens. I've never seen it, but I've heard it happens. It's heads or tails. It's going to go up. It's going to go down. It's one or the other. You jump in. You decide when you buy. Actually, before you buy, you should have in your mind your exits. And that's plural. It's not one exit. It's more than one. Which means know when you're going to get out and take your profit. Know how much you're willing to take a loss. I refuse to take a loss, so that one doesn't work for me. Okay? But how much time are you going to hold on to it before you say, this thing ain't going anywhere, I'm just going to jump into something else? But you should have all your exits lined up before you even buy. All right, anyway. P. Everly, VOO, dude, you know I hate that thing. I do. So I'm not even going to bother looking at it. Junior, bingo. Is bingo really a stock? Is it really? BINGO. You've got to be kidding. Can't find that symbol. Virgo, VIRGO. That's not a symbol either. No, it's not. Super dog. Oh, sup, dog. All right, Alex. SPMO. What the hell is that? SPMO. Nope, I don't do monthlies. Sorry, we already said no to gold. IDVO. What the hell is that? IDVO. Don't you guys do reach? I mean, seriously. This is not a game for children. This is an adult game where you put money at risk. So why are you putting that money at risk and not doing any research? When I say I only do weekly options, why are you showing me stuff that has monthlies? Rule number 1 is pretty simple. Never buy something you don't know or you don't understand. So if you know it, then you know it only has monthly options. So why are you asking me? I am mass where look at Caterpillar. It was a no. 110 Beast, opportunity cost. Isn't it better to take a small loss sometimes to free up capital instead of hold? You're absolutely right, 110 Beast. You are absolutely right. It is. But I refuse to take a loss. So I will hold something and I will collect the dividend and I will collect a premium until it recovers. Sorry, that's just me. Actually, I'm thinking of taking profits on Coca-Cola. Alex, that's a great idea. Coca-Cola. Yeah. Okay. The bottom right here, the last 30 days, we're at 67. She jumps up to 78. 67 to 78, it's $11. $11 on a $60 stock. That's 18%, maybe, somewhere in that area. From 67 to 78. Maybe 3,000 of losses a year. Max loss for tax reasons. Okay, that makes sense. If that's what you're doing. Okay, Caterpillar, we already did it. P. Everly Q's, come on, dude, you've been here. I've seen your name before, so I know you've been here before. Okay? You know I don't do the Qs. You know I don't do gold, and you know I don't do monthlies. So I don't know why you're asking me to take a look. What else do we got? Yield max equals scam. Yep, Heats, I agree with you. I don't do anything in the Qs. Johnson & Johnson, IMAS. You're going to be disappointed. Okay, Johnson, it's at the high of the year. I don't buy at the high of the year. And also, Johnson & Johnson is so freaking huge. 237 to 237 is paying 325. That's nice. But I don't buy at the high of the year. Why would you want to buy something at the absolute high of the year? It's never been there before. It's new territory. So why look at it? All right, let's break out the chair, answer some questions. I got in and out of yield max, as so glad I did. Was nice weekly payouts for a few months though. Yeah, I hear you. I mean, don't get me wrong. It's a merry-go-round that's a relatively new one. You can jump in, take some profits, but for the long term, I wouldn't do it. URA. I don't know. URA what? URA. Global Uranium ETF. Dude, it's a... Okay, hold on. If you really like it, Everly, okay? At the high last week, now it's dropping. What are you waiting for? What do you want out of this? Here's the high, here's the low. Here's where it was, here's where it is. Look, it went up. Now it's taking its profits and it's coming down. If you really like it, wait until the bottom shows up. When the bottom shows up, it might be tomorrow, it might be next week, it might be the week after. When the bottom shows up, it will look something like, okay, it'll look something like this. Get the high, bottom. Then she goes up. Then she comes down, bottom. Then she goes up. See? 1, 2. See? Just follow it. If you really like it, watch what it's doing. TAQ. I never heard of that one. TDAQ. Tapalfa Innovation 100 Grand and DAIN ETF. No options. Why the hell are we looking at that? Passport Eric. I'm ready for good trades for Monday. What was the 5 from yesterday? The 5 from yesterday. You ready, Eric? This is the 5 from yesterday. Macy's, Boeing, Hewlett-Packard, and Dollar Tree. That's what we found yesterday. JEPQ, Charles, I don't do JEP anything. All right, Armando, we already looked at Lowe's. Kimberly Clark, ooh, nice. KMB, Kimberly Clark. Ooh, nice. Nice, I like this one. Who came up with this one? Who came? Oh, user 22554412855522. Why couldn't your parents name you Bill or Ted? Patty. Patty would have worked. All right, anyway, Kimberly Clark. The high of the year, the low of the year. Where was it a year ago? Where is it now? Look at the motion. Up, down, up, down. Now she's going back up again. 104.26. The 104s are going for 175. That's way over 1%. Now, you've heard me say it over and over again. I'm looking for a simple, safe, predictable, consistent 1% per week using nothing but good pre-qualified dividend stocks. Kimberly Clark is a dividend king. 5 decades of increased profits, year after year after year, higher and higher and higher. But you got to ask yourself some serious questions. Number 1, does it make sense? Number 2, do I like this company? Number 3, am I willing to put my money into this company at this current price? Number 4, am I willing to do a covered call every single week until it hits my target price. Now, Kimberly-Clark has been profitable for 5 decades. That's 50 years. Every year, higher and higher and higher dividend payments to the shareholders. That's you and me. If and only if you like Kimberly-Clark. Now, don't be thinking that you're going to buy it and retire in a couple of weeks because it's going to shoot to the moon. Sorry, dividend stocks don't usually do that. Okay, they're usually slow, boring, steady, repetitive. It means they do the same things over and over again. See, I'm 62. I'm no longer a spring chicken, and it's very, very challenging for me to admit that to myself. Okay, because I still think I'm in my 20s and 30s. I'm not, but I like to think that I am, because I still get out in the soccer field and I still play soccer. Yep, I get out there with the guys in their 20s and 30s. They call me Grandpa. say, Grandpa. Say, pass the ball, Grandpa. Come on, keep up. Anyway, I get out there and I get, anyway, besides the point. I'm not the oldest guy there, though. There's one guy, he's 84 years old, and he still gets out there and plays. 84 years old, and he still gets out there. He's from Peru, so it's a different world from where he's from. Anyway, so, Kimberly-Clark, you like the 104s? I love the 104s. Let's take a look. Okay, here we are. Let's zoom in, take a look at the last 30 days, and ask yourself, does it make sense? Okay, well, let's take a look. 30 days ago, we're at 101. We dropped down to 96, shoot up to 103, drop to 98. Now, look at this. 1, 2, 3, 4, 5. 5 days in a row going up. Now, that's just for the last 30 days. But let's pull back for a little bit because that doesn't look quite good. I don't like buying it 30 high, but look at where it is. This gap is going to fill. Okay, it's going to fill eventually, and the price is 120, so that's the target, to fill that gap. So how long is it going to take to get there? It's not going to go there straight away. It's going to go, it's going to retrace, but eventually it will go up and fill that area right there because gaps have a tendency to fill. So let's take a look. What is the possibility of doing Kimberly-Clark? All right, let's get this one out of here. Let's do next week's 104s. Okay. Now follow along if you will. The 104s right there. Okay. Now for those you don't know and those of you that are new, okay, the screen behind me, that, just the screen, not me standing in front of it, the screen itself is live on YouTube. So you could, if you wanted to, take your phone, your tablet, your laptop, or whatever, and go in the other room, sit in front of the big screen TV and pull it up. You'll be able to see the numbers a lot easier. Okay? You'll still hear me, but you won't see me on the big screen. Anyway, so let's take a look. Now, remember I said I'm looking for a simple, safe, predictable, consistent 1% per week. So when I say simple, the easiest trading strategy is just buying and selling. That's the easiest. But there's no profit there until the stock moves. Then you get the profit. Then you got to sit and wait. It's like, all right, when do I get out? What I like about the covered call, it's a simple strategy. It's safe. It is so safe that the federal government allows you to do it in your IRA. All right. I got to step on my standy pad. It's good for my feet. That's part of that getting old crap. Anyway. Okay, so simple, safe, predictable. Remember I said predictable? Watch this. Okay? We want to do just one contract. Okay, now, when I say predictable, this is the order here. Now, I always tell people, all students, say, read it out loud to make sure it sounds the way it's supposed to. All right? Buy one covered call Kimberly-Clark, KMB. 13 February 26. Well, 13 February 26 is next Friday. This option is going to expire 3:59 p.m. next Friday. So if whoever buys it, now remember, I'm selling, right? I'm not buying, I'm selling. I'm selling somebody the right not the obligations. That means they can do it if they want to. They don't have to do it if they don't want to. Now, the interesting thing about American options, they can exercise anytime they want. They can do it tomorrow. They can do it Thursday. They can do it Friday. They can do it Wednesday. They can do it anytime they want. European options can only be exercised on the day of expiration. That might be something worth looking into. I know nothing about the European market, so I don't even pretend about that one. So, the 104 call option. The stock is currently 104.26. So, think about it this way. If the stock is 104.26, and I'm selling it for 104, I'm losing 26 cents right off the top, right? Well, that's okay. Do I have any questions over here? No questions. I'm losing 26 cents right off the top. So I'm going to take that 26 cents right off the premium. But I'm still walking away with 151 bucks per contract. So walk with me through this for a second. See if you understand it. All right. If you don't understand it, just ask me to clarify. All right. So I'm buying the stock first thing in the morning, 104.26. I'm going to turn around and sell it for 104. Okay. My profit is 151. My investment is 10,249. Look at it this way. Okay. Let me bring my chair over here. Okay. If my profit is 151 bucks per contract, I'm investing $10,000 per contract. Now, some people complain and say, you mean I got to spend $10,000 to make 151? Well, you're looking at it the wrong way. If you're looking at it that way, well, yeah. But if you're looking at it, I'm creating a weekly cash flowing asset. So the cash flowing asset here has the name of Kimberly Clark. That's the name of this weekly cash flowing asset. As the stock goes up, so doesn't the dip, so doesn't the premiums. So I'm gaining 151 bucks for 1 week. Guess what? Next week, I can do it again. And the week after that, I can do it again. The week after that, I can do it again, and I can keep doing it every single week. And every single week, I can get a percentage of my return until it hits my target. What's my target? 104. What's it at right now? 104.26. So it's already over my target price. So hypothetically speaking, if the stock doesn't move at all, I'm putting up 10 grand and I'm getting 151. Then I get my 10 grand back. What is the percentage? That's the important one. So to find the percentage, we take out the calculator. All right, we take the profit, 151, and we divide it by the investment, 10,249, and that gives me a rate of return for 1 week, 1.47%. 1.47, just a shy of 1.5% for 1 week. Now, if I do this every week, 1.4%, let's multiply that by 52 because there are 52 weeks in the year. That comes to 76% at the end of the year. Okay, so how long does it take me? Well, number one, you got to find the company first. I got a list of 300 companies, that's it. And my list is broken down week by week by week by the calendar. Because the calendar tells me exactly what stocks I'm looking at this week, exactly what stocks I'm going to look at next week, the week after, the week after. My calendar is already full of stocks because it's the same ones over and over and over again. Here's the funny thing, okay? I don't know if it's funny, but it's coincidental. I don't know. I'm going to tell you, and you give it your own label. All right, here you go. Because we already said dividend kings, dividend aristocrats, dividend champions, Warren Buffett's list, blah, 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 blah. We already said that. So we got 300 companies, 300. But there's 365 days, 12 months, 52 weeks, 4 quarters. Okay. Now, if I take those 300 stocks, throw them into the calendar, guess what we got? We got 4 quarters. And each quarter has 13 weeks. So week 1 of the first quarter looks the exact same as week 1 of the second quarter, which looks the exact same as week 1 of the third quarter, which looks the exact same as the week of the fourth quarter. So if you like Kimberly-Clark, it's going to pop up 4 times throughout the year. So you buy it 4 times a year. You get 1%. That's 4% just on Kimberly-Clark. Great. Well, what do you do next? Well, let's look at Johnson & Johnson. That's in business for over 100 years. How about Lowe's? They're a dividend king. How about Waste Management? That's a good company. IBM, there's another one. AT&T. Good quality companies that have been around for 50 to 100 years. They will most likely outlive me. They will most outlive most of you guys. Coca-Cola has been making Coca-Cola for 140 years. Do you honestly think that when I kick the bucket, they're going to stop making Coca-Cola? No. You think they're going to stop making Coca-Cola if you kick the bucket? No. They're going to continue to make Coca-Cola. That's it. That's all they do. So, a good quality company that increases its profits year after year after year. I'm only looking for 1%. This one's offering almost 1.5%. So we're going to save this one. We're going to save this one and add it to our list. All right, let's take a gander at it. Where is she? Where is she? It's going to pop up any second. There it is. And there she is, right there. Is that big enough? By one covered call, Kimberly-Clark, 13 February. The 104 call options. 151's a profit. $10,249.66 is your investment for a 1.4% for 1 week. Think about it. 5 or 10 minutes a day. Look at it this way. If I invest 5 or 10 minutes a day and I make 1% a week, that's about an hour of my time for the week. Okay, so you work 40, 50 hours a week, good for you. I work about an hour. I make 1%. But here's the thing. I have 50, count them, 5 decades, 50 years of money behind me. I'm retired now, so all the money I made in my working life is now at my disposal to invest the way that I want. So if I have $100,000, 1 hour of my time is worth $1,000 an hour. If I have $500,000, 1 hour of my time is worth $5,000. Now, you're not going to get there right away. It took me 50 years to get here. Okay? I'm 62. My first job, what was I, 10, 12, 13 years old? I don't know. 1974, Old Man Simmons Farm. I worked on a farm, my very first job. Me and my friend Bruce. Okay, he lived 2 doors down the street. I remember his sister Sherry. Oh, the girl next door. Anyway, yes, she was the very first girl I kissed, the girl next door. Anyway, isn't that the way it is? The first person you kiss is usually the boy, the girl next door. It is what it is. Anyway, so me and Bruce, we would jump off the bus, because, the bus would come up the hill, we'd jump off the bus, and we'd jump right in the back of Old Man Simmons' truck. We wouldn't even go home. We get off the bus, we go onto the truck, and we went out in the woods, and we wouldn't come home until like 8, 9 o'clock at night. That's it. And we made $5 for 4 or 5 hours of our time. It was the 70s. $5 was a lot of money for us, because we were both dirt poor. Anyway, so pick a good quality company. Make sure it's profitable. Do a simple, safe, predictable trade that can get you 1% a week. That's what I do. Now, I'm not telling you what to do. This is specifically entertainment and education whatsoever. I don't give tips. I don't give recommendations. And the only advice I give, if you're driving down the road, don't stick your head out too far. It might go home in another car. That's the only advice I give. Also, paper trade first. It's like playing Monopoly. 4 green houses, 1 red hotel. Round and round, round you go. Pick up some money. Pick up $200. Grab some dough. It's just a game. But this is an adult game with adult consequences and adult prizes. Okay? What do we have next? Let's get out of there. Get out of there. Get out of there. Back to here. And let's find something else. Come on down. What else we got? All right. Down here. Diamond. Give me blue chip dividend, that gold in dividends. All right, I already gave that to you. Let's grab this seat. Grab a seat, get comfy. Old Republic, dude. You have to give me the ticker symbol on that one. All right, Heats wants to take a look at waste management. What do we got? We got a half hour left. Waste management is a monthly, dude. Come on, I know you're relatively new here, okay? But I don't do monthlies. Let's get this thing out of here. What was that one? 1.2, 1.5, 1.4. All right. Waste management is a monthly. What's your core holding? Okay, Heats, my core holding is basically the Dividend Kings, Dividend Aristocrats, and Dividend Champions, and the contenders. Okay, I like companies that are consistently profitable. All right, Paul, I want to see 10, sir. I'm not quite sure what you mean by you want to see 10. What stocks are the best value right now after the sell-off? My guess would be those companies that have historical performance behind them and that public needs. Colgate Palmolive. What do they make? Toilet paper, tissue paper, paper towels, toothpaste, toothbrushes, windshield wipers, stuff that we use every day. Dishwashing liquid, laundry detergent. That stuff we use every day. Okay? A good quality company. No way, man. CPB. Uh-oh. What is CPB? It sounds familiar. CPB. Campbell Soup. Ooh, check that one out. That's a nice pick. Who came up with that one? No way, man. No way, man. All right, here we go. The high, 44. The low, 26. Where were we a year ago? 37. Now we're at 28. Look at this. Up, down, up, down, up. Look at that. A nice slow run up. Okay? High of the year, bottom of the year. Now she's going up. Now you've heard it over and over and over and over and over and over and over again. In the stock market, you buy low and you sell high. Well, guess what? You cannot get any lower than the low of the year. And that was over a month ago. Now she's going back up. There's the high of the year, 44. We're at 28. We get all that space to run. That's a lot of real estate. Let's see what we got out of it. Last 30 days. Here you go. Drops. Now she's going up. How far up is she going to go? Well, right now we're at 28.71. So 28.71, the closest one is going to be 29, or I would go with the 28.50. It's a safer trade. So let's see what the 28.50 looks like. Markets are down. What are we getting into? Chance. Wait a minute. Yeah, chancel. Wait a minute. Chance it drew. Chance it drew. What the hell does that even mean? Chance it drew? All right. Sit tight. All right. So we're going to take a look at the 28.50s on Campbell Soup. If you like Campbell Soup. The company's over 100 years old. So think about it. You really think they're going away? I don't think so. So Chris Kidd, Old Republic, you got to give me the ticker symbol. Okay? And user 225544, whatever. I'm going to call you Peter. Peter, we'll take a look at Macy's in a little bit. okay? But right now we're doing Campbell's Soup at $28.50 because it just sounds good. Good. Just one contract all the way down to one. There it is. Let's hear what we have to say. All right. Buy one covered call, Campbell's Soup, CPB, 13 February, next Friday. The $28.50 call option. The stock is currently at $28.71. So we're selling it for 21 cents less than when we paid for it. But we're still walking away with 46 bucks. And I know it doesn't sound like a lot. Don't let the numbers scare you. Do the math. What is the rate of return? If I'm walking away with $46 per contract, and each contract's only $2,800, what's my rate of return? And then how safe is my investment? Do you really think Campbell's Soup is going to go away? Do you really think so? I mean, it's been around for over 100 years. You really think they're going to say, yeah, people don't like soup anymore. Let's close up shop. Yeah, I don't think so. All right, let's get the calculator. 46, the profit, divided by the investment. Remember, anytime you make an investment and expect to get a rate of return, you got to calculate what your return is to see, is it worth the effort? 46 to profit, the investment, $2,804. That's 1.6% for 1 week. Do the math. That's close to 70% for the end of the year. It's only 5 or 10 minutes a day. Terribly sorry if I'm going to inconvenience you to get 50% return on your money. No, you don't have to sit in front of your computer all day. The most time you're going to spend is accumulating your list, going through the stocks that you like. The easiest way to do it is just look at the winners. The winners are easy. Somebody else has done the work for you. The companies on the Dividend Kings list have been consistently profitable for over 5 decades. There's no questioning, are they good companies? The Dividend Aristocrats, Dividend Champions, same thing. 25 years of increased profits. Somebody has already done the work for you picking the stocks. So if you take a look at those 5 lists, the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren Buffett's list, somebody has already done the work for you. You want to add and subtract from that list? Hey, that's a you thing. But if you want the best of the best, that's them. That you cannot beat the Dividend Kings. There's some companies, there's one company. One is the loneliest number that you'll ever do. One is the loneliest number that you'll ever do. 2 can be as bad as 1. It's the loneliest number since the number 1. It's just no good anymore. Come on, where are you? There it is. Oh, there it is. Campbell's Soup. Right there. Buy one covered call, Campbell's Soup. 13 February 26th. That means it's going to expire next Friday, 3:59 p.m. So whoever buys it, got to do something before then. The $28.50 call option. I'm making 46 bucks for each contract. Each contract's going to put me up 2,800 bucks, and that's going to be a 1.6% return for 1 week. Okay, Dr. Corey, Hormel is a monthly, so we're not even going to look at that. Sorry, Doc. All right, so let's go backwards. Boom. I hate it when it does that. It does it every once in a while. Okay, technology is great, but every once in a while, it reminds me, hey, it's just no good anymore since you went away. Now I spend my time making rhymes of yesterday. All right, what is this one? 1.6. 1.6. Let's do this. What do we have next? Macy's. I like me some Macy's. Hey, Alex, I hear you. Campbell had bad press. CEO caught in a hot mic saying he wouldn't eat that shit. Yep, I remember that. That's why she dropped. But guess what? Some people have no choice in the matter and they have to. What else do we have here? Okay, what do you think about buying Microsoft right now? Now, we looked at Microsoft a couple of minutes ago. Okay? Zoom in, take a look at Microsoft. You tell me what you think. Okay, 30-day high, 490. 30-day low, 393. That's about $100 drop. That's a 25% drop in 1 month. Okay? The high, 490. Right now, we're at 393. That's a 25% drop. And it's still going down. Look, if you really like Microsoft, just sit back and relax. Don't be impatient. Wait for the bottom. See, the bottom will show up. Okay? Drop, bottom, and then it slowly goes up. Okay? Wait for the bottom, and then she'll slowly go up. You got a gap down right here. That baby's going to fill. So when this thing does turn around, okay, she's going to go around and go back up to the 480 area to fill that gap. Because gaps have a tendency to fill. Not a guarantee, a tendency. Okay? For the most part, gaps have a tendency to fill. All right, we got 20 minutes left. What else do we have here? Macy's. Last 30 days. Check this out. 30-day high, 24. Drops down to 20. That's a 20% drop. From 24 to 20 is a 20% drop. Now she's going back up, but no, she pulled back today. Well, I'm okay with that because I'm short on Macy's. 494. Sorry, my mistake, 494. The $5 option's going for 18 cents. That's over 3%. And guess what? I've had Hertz for the past, I think, 4, 5, 6 months. And it's been giving me 1, 2, 3% every single week. So I got no problem holding on to Hertz. It just depends. Do you like it? Look at what it's been doing for the past year. Okay, up to 8, down to 4.5. Up to 7.5, down to 4.5. Up to 7, down to 4.5. Up to 6, down to 4.5. It's just staying in this range right there. Just, they call that going, let's do it this way. You ready? Watch this. 2 pens. They call it going sideways, sideways. If you like it, don't buy it unless you like it and you're willing to hold on to it. Okay? So let's take a look at Hertz at $5. Because I got Hertz at $5. All right, Alex, check this out. Beast. If one of the stocks you have dropped 5 or 10% week, do you ever sell another option on it next week? Absolutely. Okay, 110 Beast. I see. You've been here long enough. It surprised me why you're not one of the members of our morning trading group. It surprises me. But here's the thing. I check every single day what my positions are. And it's always the exact same questions over and over and over again. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? And what should I do next? Now, what should I do next could be almost anything. But I'm going to repeat a statement from the great John F. Kennedy. Are you ready? We cannot answer the questions of tomorrow with the information we possess today. That means I have no idea when. It's not if. Remember that. It's not if the stock drops. It's always when. Because they only do 2 things. And every day you're flipping a coin. It's going up or it's going down, one or the other. That's it. It's going up or it's going down. That is it. Where is it at now? Where does it look like, if anything? Something when I look at up, don't have to do anything. I don't have to. I love that. Once in a while, I'll get something. All right, what do I got to do? How do I keep from losing money on this position? That's one of the questions I ask. How can I keep from losing money on this position? It's a fair question. But I can't answer the question without the big picture in front of me. What's it at? Where's it going? What does it look like? What's the market maker offering me? What's my break even? These are all simple questions. You know, it's like driving a car. You drive a car down the road, you don't pay attention to all the questions running in your head. A question like, how much fuel did I have? How fast am I going as opposed to what the speed limit is? How fast am I going as opposed to what the speed limit is? Does it increase or decrease my likelihood of being pulled over by the police if there's any police around? So many questions going through your head, but you don't always think about it. Yes, dollar cost average is sometimes on the list if it makes sense, if you have the money. Because if I'm going to take a picture, but I do know I'm going to be disappointed because I've been working 5 decades. Okay, listen closely. 5 decades. My very first job was in 1974. My very first job. My Social Security check is going to be $589. That's it. $589. You know how much I'm pissed off by some of these illegal immigrants coming in and getting more money than I'm getting? They don't work shit, and I work 50 years. Yeah, that pisses me off. But we're not going to talk politics. All right, so 26, 474. Let's check it out, the numbers, and does it make sense? Okay, this was only 26%, $26 profit, but the contract is only 474. So we're going to divide 474, and that comes to a grand total of, are you ready for this, Alex? 5.4% for 1 week for Hertz. Dr. Corey agrees with me, no politics. Okay? Sounds like you're talking politics. No, I'm not. I was just, venting a little bit. You're definitely paid your fair share and absolutely helped many people. I appreciate you. Thank you, Beast. But, Alex, what do you think? 5.4% on Hertz for 1 week at the $5 strike price. Now, here's the interesting thing, Alex. It says, when you sell a covered call, you got to remember, if I sell the 5, right, break even's not 5. It's 5 plus whatever that person paid. So it might be 550. It might be 540. So the stock has to go over 540 just for them to break even. And nobody wants to exercise the stock just to break even. They want to get a profit. So the stock has to move up enough to make it enticing enough for them to go through the effort of cashing in their contract. Holy cow, we're down to 53. That's horrible. We only got 15 minutes left. So what other questions do we have? Let's check this out. Oh, wait a minute. We want to save Hertz, don't we? It's 5.4. Imagine that, 5.4 for 1 week. That's crazy. 5.4 for 1 week. Where is it? Right there. Here we go. Hertz. Hurts so good. Come on, baby, make it hurt so good. Here we go. Buy 1 covered call. Hertz. 13 February. The 5 call option. The stock at this moment in time is $5.10. It's $5.10, and I'm going to sell it at $5, which is less than what I'm paying for it. But who's ever paying that premium for the option to buy it from me at 5 is paying more than that, and I'm still walking away with 5% profit. That's just crazy. 26, 474, 1, 2, 3, 4, 5, 6. Ah, damn it. I hate it when it does that. I do. I hate it. I hate it. I hate it. I hate it. Hate it. Hate it. I'm afraid to sell a call for 5 since I've got it at 549. All right, Alex, look at it this way. Sell the 550s. You don't want to sell the 5s? Fine. Sell the 550s. Okay? Whatever the strike price is, you have to add the strike price to the premium you collect, and that's the break-even number. The stock has to go over that number just for the other person to break even. Heat, we looked at waste management. It's a no because it's a monthly and I don't do monthlies. $5.4. There we go. There's today's picks right there. Alrighty, alrighty. What do we have? What do we have? Ooh, Mort. What the heck is Mort? Mort. Let me go. There. Mort. I never even heard of Mort. M-O-R-T. Hell no, I don't do monthlies. Who came up with that one? Vanek Mortgage REIT. I don't do monthlies. Heat, Wally World. Heat, you actually gave me a good one. WMT. Wally World. Hell no, I don't buy at the high. Do you see it? That's the high of the year. No, thank you. User, I'm from the cold Minnesota. Warm me up with 3M. Woohoo! 3M. 1, 2, 3. Here we go. That's going to be a tough one, dude. Sorry. Last 30 days. Okay. Oh, no, that's not good. All right, that's not good. Check it out. 150 to 165. I'm going to tell you right now, 150 to 165 is 15 bucks. That's a 10% increase. Do you honestly, ask yourself the question, honestly believe that from the bottom to where we are now, a 10% increase, you think that people bought that aren't going to take the profits? That's not a game that I want to play. She just jumped 10%. Why do I want to jump in there and see if it'll go more than 10%? No, thanks. There's too many other good companies to do that. All right. Sorry, you guys down here, the questions just disappeared. So what else do we have here? But weekly premiums available to sell are sometimes less than 1%. Yeah, they are. My goal is 1%. I didn't say I made 1%. Okay, Everly, come on, dude. We already said no to the Qs. Why are you asking me again? Can you analyze T2? Take-Two Interactive. Hell no. Now, if you really like Take-Two, check this out. Okay? 30 days ago, we're at 260. Now we're at 193. That's a big-ass drop. That's $72. $72 on a 260 stock is, what, 25, 26%, somewhere in that area? So you get 25, 26% drop. Wait for the bottom. Whenever the bottom shows up, it might be tomorrow, it might be the next day, it might be the next day. You just don't know. Okay? So, big drop. Wait for the bottom, wait for them to shoot up. Now, the 193's, $6. Okay. If you like it. Hey, Deb, sorry about that. For some strange reason, YouTube just shut off. All right. Noted the Qs. CTAS. CTAS. C-T-A-S. Interesting. 194, the 195. You like that one? Did you like that one? All right, let's take a look. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down, up. So it's going up right now. That looks pretty good. Let's zoom in and see how it looks. Last 30 days. Okay, up, down, up. There's your 2 days. Here's your bottom. 1, 2. That's how you find a bottom. Okay? Very next day, higher. Next day, higher. Here's 2 days to the upside. 194. The 195s go for 175, so you get your 1% if you like CTAS. That's always the catch, isn't there? Do I like this company? Is this someplace I feel safe with putting my money into? Because that's what we're doing. We're putting our money somewhere. And just think of it this way. When you get to where I am, when you're retired, you got two choices and only two. Okay, I don't sugarcoat things. It's just, I'm too old to remember all the lies, so I just tell you the truth. Whether you like it or not, I really don't care. The truth is the truth. You got two choices and only two. Okay, my kids hate it when I say that. You got no choice in the matter. My kids hate it when I say, you got no choice in the matter. So yes, I do. I said, no, you don't. When I die, you get 25%. I got 4 kids. You get 25% of everything I do. He says, yeah, I don't have to take it if I don't want to. I know. That's your choice. You have no choice because you take it or you don't take it. But it's going to be yours. Anyway. I don't like Mera. I'm stuck with Mera. Dude, you should not have bought it in the first place. Alex, I'm going to tell you something your father should have told you a long time ago. Tough shit. You bought it. Stick with it. You learn from your mistakes. Exactly. Rule number 1, Alex. Never buy something you do not want to hold on to. Okay? You've been here long enough. I can give you shit, brother. Okay? You've been here for a couple of months. You don't want to buy it. You don't like Mera? Don't buy it. Simple. All right. Oh, I'm from Iran. I don't know English. Just type and I'll understand. The situation in Iran is getting worse. They're killing people alive here. Help us. Yeah. Do we trade options? Yes, I do. I don't do politics, so I have no idea who that was. And I don't know Dev. Dev, why did you let that go by? You should have, you're the moderator, dude. That shouldn't even have showed up on the screen. Yeah, so user 176 says sometimes the premiums are below 1%. Yeah, they are. Implied volatility so high, large premiums. Yeah, I get it. Do I trade options? Yes, I do. So, yeah, every once in a while, the premiums will be below 1%. You can't, what did Mick Jagger say? You can't always get what you want. Ooh, take a look. Nobody has looked at General Dynamics in a long time. Well, let's take a look at General Dynamics. Wait a second, we're on CTAS first. Let's finish up CTAS first. Uh-oh, we got 3 minutes. CTAS, 194. Okay, let's check it out. Let's check out the 192.50s right there. Covered call, 192.50. There it is. One contract. There it is. Let's do it. Here we go. One covered call, CTAS, 13 February to 192.50s, 239, 19,000. That looks a little over 1%. Let's take a look. If you like CTAS, that's what it always comes down to. Do I like this company? Let's keep going. All right, calculator. Profit, 239. Divided by my investment. My investment in this one is $19,011. Gives me a grand total of 1.25% for 1 week. If and only if you like CTAS. Procter & Gamble. Cool beans. We'll have to look at it next time. We got 2 minutes left. That's it. I want to look at General Dynamics before we go because, hey, it's General Dynamics. All right, so let's save this one. We'll do one more, and that will be it for the day. Actually, that'll be it for the week because my weekend starts tomorrow at 4 o'clock. And I don't do Friday nights anymore, and I don't do Saturday nights anymore. All right, this is 1.25. Here it is right there, CTAS. Whoa, that's a little too big. All right. There. One covered call, CTAS. 13 February, 192.50. Here's the profit, 239. Here's the investment, 19 G's, and that is 1.25% for 1 week. 1.25. If 1% a week is 50% a year, How much do you think 1.25% is every year? 1.25% a week. How much is that by the end of the year? No, we're doing one more and that's it. We're doing General Dynamics and that's it for the night. Actually, that's it for the week, and then we'll start this all over again next week. Okay? I'm going to answer questions, and then that's going to be it. All right, 1.25. There we go. Whoops. 1.25. Woohoo! Gotta love it. General Dynamics is the last one we're going to do, and that will be it. Here, oh, no. Nah, look at that. Hell no. Sorry, no General Dynamics. Look at it. It looks chaotic. Okay? High, low. Where is it? It's down, up. Who knows where it's going? No real rhyme or reason. So let's answer questions. That's it. Ooh, John. I wish you had said something earlier. I love Citigroup. I do. 65%. Way to go. 1.25% a week is 65% a year. Now, Beast, I can deal with that whatsoever. I would like 65% a year. I think I only made, wait a minute, somebody made 68% a year, someone in the group. General Dynamics is high of the year. I think that's why the premiums are high, probably. John, I do love Citigroup. Michael, you're welcome. The 10-minute rapper. Mike Sweeney. My name is Sweeney. Way to go, Dan. Running Gold, LW, Hormel. Okay, we looked at Hormel already. It's a monthly. We don't do monthlies. Waste Management, we already looked at some monthly. Don't do that. Adobe, way out of our price range. American Airlines, next time. NVO, yes, I have some NVO. We'll look at it next time. CVS, thank you. What kind of stocks do you trade? I do stocks and options. Where's SPY going to correct to? Don't know, don't care. It's not one that I trade. Angela, I only trade companies that are consistently profitable for at least 2 decades. That 10, 20 years consistently higher and higher and higher and higher profits. SPY does not have it. Do I scalp? Yes, I do. Okay, I buy on Monday and I usually sell on Friday, but I only do covered calls on good quality dividend stocks. All right, NVO, CVS, Netflix, Jake, next time. So you would generate $7,800 from KMB 1 year from an investment of $10,000. Well, see, Running Gold, you make it sound wonderful, but it doesn't always work that way. Because you may get 1.6% this week. Next week, you might get 1%. You might get 0.75%. But in theory, you're right. Daddy Bear, does that include the 0.26 cents share reduction? All right, you're thinking of the, what do you call it? Hold on a second. I know what you're saying. We're talking about General Dynamics. All right. No, not General Dynamics. Which one were we talking about? KMB. Whoops. KMB. Okay. All right, Daddy Bear. Are you ready, Daddy Bear? You're right. Buying 104.26. Okay? If I sell it at 104, I'm collecting 175. All right? So you take the 26 cents off of the 175. Now you're walking away with you take the 26 cents off of the 175. That brings you to 149. Okay, so 149 on top of a 104. Yeah, that is your percentage because the math is already built in. The 26 cents is already deducted from the premium that you collect. It was a good catch. Not many people catch that, but you're right. You buy it at 104.26. You sell it at 104. You lose 26 cents right off the top, but you're gaining it from the 175 that you're collecting. So you got to remember that because you're collecting it from the premium. You was the angry gingerbread man the other day. Yes, I was. Thank you. You remembered that one. So let's keep on going. What else we got? Passport Eric, what is Dollar General or Dollar Tree? Are you kidding me? You don't know what Dollar General is or Dollar Tree is? It's a discount store. It used to be $1. Everything used to be $1, but not anymore. Jane, Pfizer, we'll look at it next time. Camp Road, Abbott Labs, next time. Zem, good evening. Kevin, CBS, next time. John, if you like Macy's, Nordstrom was a great company to trade, but Nordstrom family took it private. Yes, I'm aware. We used to trade Nordstrom 2 years ago. If you go take a look at my trades from 2024, you would see Nordstrom's in there. The Word. Are you teaching selling covered calls? I'm just finishing up. Okay. Yes, I am. Okay. But I'm live every night, Sunday, Monday, Tuesday, Wednesday, Thursday. I don't do Friday nights anymore, and I don't do Saturday nights anymore. So the next time I'll be on will be Sunday night at 9 p.m. And I go to about 11. So we're 5 minutes past my bedtime. Do you buy earning options? I don't buy options at all. I sell options. What's more beneficial for long-term property or stocks? That's debatable. Isn't that weird? That's debatable. Because look at it this way. Stocks, no overhead, no employees, no electric bills, no maintenance, no restriction on location. Means I can go anywhere I want and trade whatever I want. Now, real estate. Well, real estate, you do have depreciation. You have appreciation. You have depreciation. And you have corporate expenses, depending on how you do real estate. But you also get overhead, maintenance, taxes, insurance. You don't have taxes and insurance with the stock market. So it all depends on what it is you're looking for. Do I buy earnings options? No, I don't. The Word, I am learning covered calls now. Dude, it's simple. It is simple. Come back on Sunday night. Ask whatever questions you got. I got a whole bunch of answers for you. Let's keep on going. What else do we have next? Scarlett. How you doing, Scarlett, billionaire? You're back again. I remember you here before. Slouching off, eh? Yes, I am, Kevo. Thank you. Hold on, cow. Holy cow. That's it. That's it. That's it. I am done with all the questions. There's no more questions left. No more questions left. Yay! That means we're done. Yep, I'll be live Super Bowl Sunday night. Thank you, sir. Need to learn it yesterday. Well, I was here yesterday. You weren't. That being said, you guys have a great night, and we will do this all again tomorrow. Tomorrow, we'll see you tomorrow. You're always a day away. The sun will come out tomorrow, wipe away the cobwebs and the sorrow, till there's none. Just prick up your chin and grin. All right, anyway, I forget how the rest of that goes. All right, catch you guys later. Night, good night, good night. Good night. Sleep tight and pleasant dreams to you. Yep, see ya Sunday. Sunday, New England Dragway. Okay, what are we doing? All right, let's get this over there. Let's get this up there. Let's do that right there. Let's do this over there. Let's do this over there. And now, until we meet again. Adios. Au revoir. Ach, Wiedersehen.